Good morning, guys. Welcome to this episode once again, and I would like to say thank you very much for the viewership and subscription. I'll appreciate more subscription and viewership because that's what will keep me going. So, today I'm going to talk about a very important concept which, when you look into it, it's going to change how you read price. And I hope that you put in the effort and work and get to a point where you are able to do this thing for you yourself. And to start with, I have this NZD USD, and just this year I began trading currencies. So I'm going to go to the daily time frame. I'll get rid of that, and then we head straight to the content. Now, you'll be so shocked at some of the things you're going to see in price. Sorry about that. But most importantly, what you're going to see in what unfolds, that is going to be much more important. So let us look at a random place. And this is going to be in hindsight. However, you can do this by trying to find a good software like MTJ and have a subscription for a year, and then you are able to play price from time to time and check what's happening. But for the purposes of just driving home this concept, so I'll be using hindsight. So let's see, somewhere like here, I have price that has taken up a high right there, 4-hour time frame, and then we have this one whole candle closure below the low of this candle. Now, what should that be? Coming from an area of continuation, we have a continuation of this trend and a retest into this and closure below it with one candle. This becomes an area of propulsion. So this is a propulsion block. So closing below it, this area should be sensitive enough for entries, but not yet. What you're waiting for is, we want something that will trade back into that propulsion block and confirm rejection. Okay, so we have price open here, runs into it, closes below, and then when price closes below this candle that ran into the propulsion block candle, then the open of this new candle, if it is bullish, it is suspect. We are waiting for this to be reunited with this area of one candle change instead of delivery for short positions. And once we have a candle drop from a propulsion and it is engulfed, then that becomes further propulsion block. ICT 2016 charter, content on order blocks, and you can see there is a continuation. And this is what I've been talking of when I say I'm trying to push forward a concept known as waterfall model. Now we have a propulsion candle and we have a drop from a propulsion candle with an enclosure forming an order block, and we want something to trade into it and be rejected. So we have this open, rally into it, and then rejected. So when this is rejected with a closure below this candle body, then from here to here is an important area for consideration, and the midpoint of that becomes further propulsion for lower prices. So I'm going to mark the midpoint of that candle, and the best ones, because sometimes price might not go to the midpoint, but midpoint are good for accuracy, precision, name that. So you might just as well mark that and be patient. Several hours go by, or immediately this candle opens, runs into that, then you have your cells that takes out this low as area of liquidity, right? Okay, so we have more price action this side. We have sell side liquidity. What I'm trying to say is have some logic. Don't just trade something because it's going up or going down. Know why this stuff wants to go up or wants to go down. Now this is the thing. One candle change in state of delivery, causing an order block, terminating in a fair value gap. This area here is sensitive based on that concept. However, I am not going to rush to enter into this kind of price action. I want something to run into it and get rejected. And after that thing has been rejected, be completely closed above it, engulfed in other words. So we have this run into this one candle change in state of delivery, rejected, an attempt back that closed below here, did not even reach that far. Then this open that completely closes above this, and I have my entry at the open of that, when finally price opens and runs into this open. Then I have a propulsion block, and you will not continue doing that. Why? We have change in state of delivery here, right? Also we have a fair value gap here, and also this is a bearish unicorn. So when price rallies into this, this is your target and probably the last piece of it, because then this, if we have an enclosure away from this and a confirmed for lower prices, then we can be sure you're not going to treat this as a propulsion block and seek higher prices. So for example, we had an open gap, which is an enclosure candle, right? The gap dropped. We want something to rally into that gap and be confirmed lower. So we have this fair value gap or open gap. Price plays around, runs into it and confirms rejection, and then this week becomes important. So anything that trades into that, you catch it moving lower. I didn't intend to make this video long, but you can take your time and check into price and see for yourself if you're not going to see this type of logic in price. I'll give just maybe a final example. Buy side liquidity taken right there, and then we have this one candle change in state of delivery, and then we need an attempt to run into it and be rejected. So we have this run and rejected. So this is confirmed order block, and then on this week is where you find what? Your entry. But your entry is not going to go like, I want to look for these lows. We had a fair value gap here that was not traded into, but if you break this week, you'll find a drop into a fair value gap within this range, and then respected and ran up. Change in state of delivery with one candle this area becomes sensitive, not as a propulsion for higher prices, but as a target. So your entry target. So what essentially you have is, you have this drop and order block with an enclosure below it is propulsion. So extending this to the right hand side gives you another entry when price runs into that. Maybe just one piece for the good comments I've got from the previous video. I will add in the concept of inversion. You have this fair value gap. What is everyone looking for? They want to see drop here and then internal to external range liquidity, but there's something you want also to be looking at. This closure body full below this candle that is bearish gives me one candle change in state of delivery with order block, but I want something to run into it and get rejected. Okay, so when I have price run into that with this candle and get rejected with slight body closure below this one here, and in fact this one is good one, then essentially I have inversed this, and now I can dream of lower prices beginning from there. And then of course from order block running lower, you want an engulfing. Nothing happens here. This is consolidation. Engulfing lower, attempting to order block, confirmed lower prices. Here is the next step. So until next time, I'll be closing this episode at this point, and we meet next time, next year. Enjoy your time responsibly and make sure that this thing is going to work for you. Have a great year, and I wish you a Merry Christmas and a Happy New Year. Bye.